The Stella is the redevelopment of the Ecolab University Tower in St. Paul. Vacant office building. It was a complicated deal. We were into that process for 12 to 15 months before even talking with PLG. Where PACE came in and was super helpful was we found a lender that was really bullish. They had aggressive terms for the financing, and they actually had started construction on the asset. So where they were spending dollars, and we didn't have time to wait for a bunch of participants. PACE came in as effectively like that bank participant for $16 million. So that was a big chunk. PACE was reliable, set timing, we knew it would be there. So it really filled that gap and provided reliability.
We're sitting in a period of financial uncertainty. Interest rates are bouncing all over the place. We're in a position where we don't know where anything's going. We don't know if the bank's going to be bailed out. We don't know what's going to happen. And almost every lender stopped construction lending. It was a complicated cap stack. There was historic tax credits. There was a first mortgage lender. We were never waiting on the PACE group to have their homework done, to have their paperwork in, to have their reviews done, to have their comments. It worked out really, really well.
They did not waver from their timeline that they laid out. Their legal process was easy. So that was a reliable and welcome source. People think of PACE, even myself, I thought of PACE as something that could significantly complicate a transaction like that. And really it ended up being the most simplistic capital piece in the whole transaction.
When you're taking an existing building and converting it to something new, virtually everything you touch, lights, windows, HVAC, elevators, those are all PACE eligible improvements.
We had to have a reasonable amount of debt. When I say reasonable amount, I mean, perhaps north of 50% loan to value. And so filling that gap with equity, that it would only water down the returns, and that wasn't an option. And so at the time, it was just a great way to fill an opening in a capital stack that was left by the uncertainty of the debt market.
We knew about challenges in the market and just kind of persistently following up with JLL and modifying our bid. The borrower decided that waiting time was over and they wanted to close. We had already qualified the deal, run through the cash flows, explained how PACE works in Minnesota, such that we could fill that $16 million hole and close before year end.
It took a group like PLG and CPACE to come in to reduce the risk profile a bit, bump the returns a little bit because the cost of capital is less expensive than equity. It worked out beautifully. I mean, it could not have gone better to fill the capital stack. I would absolutely use PLG to fill that gap in the cap stack in the future.